So the company that we're looking at today is Lake Resources. Lake Resources is a lithium extract company who are actively pursuing the best, clean, sustainable system to gain the highest purity lithium on the market. If you don't know what lithium is, it's the key element found in electric cars. Companies such as Tesla, Volkswagen, BMW are all looking for more responsible sourcing of battery materials and especially elements such as lithium. The demand for lithium is growing exponentially, and there is expected to be a shortage of supply in comparison to demand over the next decade, as more and more electric vehicle manufacturers are demanding lithium. So what makes Lake Resources different? Lake has great technology which has been developed by a company called Lilac Solutions. Lilac Solutions are actually backed by a Bill Gates-led fund, and the process that Lilac has developed has allowed Lake to yield a high purity product at 99.97%, compared to the industry standard of 99.5%. So you can see that Lake is getting their edge here. Now looking at the key project, Cciv, we can see that they're expected to bring in 44 million tonnes of lithium over the next 25-year period. At a current rate of between $9,500 to $13,000 a tonne, we could expect Lake to bring in $49.5 billion in revenue just from this one project alone. Lake currently has a market cap of about $316 million at a share price of 0.3 cents. Looking at a competitor such as Albemarle, they have a $16 billion market cap, and if Lake were to reach those levels, we could see anywhere between a $14 per share all the way up to about $20 per share. However, Lake isn't expected to start making real revenues from a project such as Cciv until the year 2024, so this is probably a long-term prospect. However, there is already shortages in the EV world, such as chips, as Neo has just said that they might suffer this in the next quarter reports. But so we could see Lake start to get a bit of an edge as more and more electric vehicles are probably pushing these manufacturers to try and get more resources. As we can see here as well on slide 12 of the PowerPoint presentation for investors, they are currently operating Cciv, which is their flagship project down here in the Lithium Triangle. The Lithium Triangle in Argentina is to account for 40% of the world's lithium production at the lowest cost. We can also see that they also have advancing projects going on further up north in this Lithium Triangle, which in the future could bode well for the revenues and even bolster that EBITDA margin that they already have. So looking at the positives of this company, they have great prospects for the future. However, if we were to take a slight look at the negatives, they have a penny stock still, so which means that they don't have the best recordings when it comes to financials. If you look at MarketWatch here, their income statement basically says that they don't have any sort of revenue coming in over the last 5 years from sales or revenue. When looking at the balance sheet of this company, we can see that they have a total assets growth of 12.7% over the last year, and they currently have $17.71 million in total assets value. They also have only liabilities of $664,000, which at the moment is very good, but they haven't actually officially started production yet, so we don't know what might come in the future. This company also only has $55,000 in cash on hand, and this is not the best because it could mean that they might have to do some dilution or some sort of fundraising in the future. But they did have 1.73 million last year, which says to me that they are spending that money on starting that production, and maybe it went towards the recent testings, which could be ongoing, so that might not be as big of an issue as once thought. If we have a brief look at the overview on analyst estimates, we can see that the average price target for this company is $0.54, which at the moment is just less than 2x of the company. We also have a buy rating from 2 analysts, which is not very rare on a lot of penny stocks. A lot of penny stocks don't get these analysts looking at them, but they do have a high of 0.6 and a low of 4.7. So if they was to reach any of these, you're making a nice gain on your money. But it doesn't give an official timescale for this either. They do have a financial report date coming up in the 6th this month, so be on the lookout for that if they are making any more revenue. But it's unlikely that they are, since they said that 2024 is the year that the big Cciv project is expected to be in production. So this company on the whole is probably a long-term prospect, but with the way that the electric vehicle market is going at the moment, I wouldn't say that this would be a bad hold to have for the next couple of years, and it might just start taking off gradually. Just remember that this is just a brief overview of this company. I've outlined the main things that I think are talking points, but there is a lot more to do in terms of DD. However, I do think this company is good. I do have a position in them as a long-term prospect, and I'll be keeping a close eye on them too. So on that note guys, thanks for watching. Let us know what you think about this company in the comments if you've got any thoughts, if you're in this company too. Please like and subscribe, and we'll see you in the next one.